All right, looking at a daily chart of the Nasdaq. This is my daily review. Thank you for watching. Today, the Nasdaq had kind of a milestone day today because it undercut this 13,161, and it traded down to, I believe it was what, 132. Okay, so it undercut it by roughly 30 points, and then it rallied back up to close near the highs of the session, which was 77, 77, and it closed at 371. So 6 points off the highs of the session. But what it does here, I mean, it's like a retest, right? Because it made this low on August 18th, rallied back up to 114, 149 on September 1st. And September has just been, as we all know, it's been down nearly 6%. And then today it retested this low here, which I think is significant. And it actually undercut it by a little bit. So this could set up, possibly some stocks that will be looking like double bottom bases, if they mirror the Nasdaq. So anyway, it was up today, 59 points on lighter volume. You can see the volume is lighter here, so we want to see institutional support. And this looks like just short covering. And this is day one of an attempted rally, and this is why we wait for 4 days. So it's not just short covering. We want to see the institutional support. We want to see the volume pick up. But this is the last week of September. There's not a lot of news out. There's not a lot of earnings reports or anything like that to provide a catalyst. So it's probably going to be a low volume week. But anyway, it's day one of an attempted rally. We just take it one day at a time. So the first day that we could start a rally would be Thursday. So we're just, still in a correction mode and still cautious and got the red light on and being very conservative. Anyway, I wanted to take a look at some of the stocks here on the which affect the Nasdaq, and that's Apple. And this one, again, kind of retesting the lows here. That before they go up, they got to stop going down, right? And here's Apple made that 171.96, and it's come back a couple times here. And so if you look at the other side of the trade, like the shorts, why can't they push this thing down any further? They've had some bad news with China allegedly banning phones for their government employees, but this thing can't be pushed any lower. So seeing is believing. If it can't go down, then it's probably going to go back up. So keep my eye on Apple. And if you just look, the bigger picture here, this is just consolidating in a base, and that's really healthy. You can see here it's a 9-week base now after this big run, just a consolidation. So to me, that looks totally normal and totally healthy. Microsoft looking a little ragged here as it traded down, made this low of 311, and then rallied back through the 50. So that looked positive, but then just give it up the last few sessions here, about 5 sessions in a row. Today, had a little slight, I don't know what you'd call it flat, but Microsoft is not looking good. The one that's looking the best out of all the Magnificent Seven is Google. How do I know that? It's the only one trading above its this 50 simple moving average. So, and it's just barely there, 0.2% above. So the other one's Meta, slightly below it. That's fine. This thing's just setting up in a base too. Meta looks fine. Tesla kind of broke down a little bit last week. Today tried to bounce a little, still in this consolidation pattern, but below the 50. Same with NVDA. NVDA had a decent day today. Like I said, they got to stop going down before they can go up. And if this thing can just trade above 400, between 400 and 420, that's fine for a few sessions here and just gets it stabilized, right? But like I say, they got to stop going down before they can go up. So just, this is a one that everybody's watching because the theme of the new uptrend was artificial intelligence, and this stock is at the hub of artificial intelligence, and that's why it's important. And then Amazon sliced the 50 last week, And below the 50, I'm not interested. And so that thing looks weak today. A weak little bounce on light volume. Anyway, I'm going to take you down the negative road and bring you back on the positive track as usual. Just going to do some random stuff here. OKTA, the cybersecurity stocks, for some reason, I don't know, it's selling off on lighter and lighter volume here, OKTA. But with the Cisco Splunk deal, I thought, this area might, take off a little bit, but man, it's just been nothing but selling. CrowdStrike, the same thing. They actually had a analyst meeting and they just raised everything, all metrics, billables, everything for CrowdStrike, sales, earnings, and this thing just keeps going down. So it's just kind of mechanical trading, and this looks like just a pullback in lighter volume, except for this day. You put your thumb over this day, but still looks good to me around that 160, 162.25, 166.99. I mean, this is just marking time. And if the market's going to rally, I think CrowdStrike will rally with it. But they're just showing weakness. Weak today. Zscaler, same thing, weak today, down nearly 2%. Palo Alto Networks, which was one of the stronger of the group, is well below the 50 here. This is the Friday afternoon they reported earnings. It spiked up and now has come back down to probably fill this gap here at 211.14, not too far away from it right now. So anyway, the cybersecurity stocks look not so hot. I'm going to go through a couple other stocks not looking too good. Alcoa making their 52-week low. APPS, this was a darling in 2020 and just has fallen off. Make a new low today. Dutch Bros, very popular IPO, and just has made a new low today. I don't know what's going on with Dutch Bros. Retail has been especially weak. I guess these interest rates are finally getting to the consumer and they're starting to slow. The market's always ahead of the facts, so it's sniffing out a slower consumer. Dollar Tree made an all-time, not an all-time, made a 52-week low today. Estee Lauder, 52-week low. Just God, that's an awful trend. They cited weakness in China a couple quarters ago, and it just continued last quarter, and they just have no momentum. And Levi Strauss, I wore their jeans as a kid, and this thing IPO'd, it did okay, and then just fell out, right? Look at this. And another low today, and then bounced a little bit. How about that for Levi Strauss? Anyway, that's enough of the negative stuff. I want to get to the positive stuff. What I have to do is I got to go to the miners, the uranium, the uranium trade, UUUU. This stock, normally I don't traffic in stocks below $10, but this looks good. This consolidation period here. Last week pulled back slightly, 2.6%, and today was up. Wow, 9% gain today. I was looking at this one in pre-market, and yeah, well, that's a nice gain. Anyway, I missed it. CCJ, Kamiko, this one is another minor stock with a uranium component, and this one nice, nearly 4% rally today, 52-week high for that one. ESTC, now this one benefited from the Splunk purchase. When Cisco bought Splunk, this thing was up nearly 2% and has been up every day since. So it's very strange reaction. Some of the software went down, and this one has rallied. So make of it what you will. MUSA, here's a retailer that's doing okay. Made another high today. I pointed this one out with CASY. CASY had strong earnings due to their pizza, and now it looks like it's going to form this like bullish wedge pattern, or a flag or a pennant or whatever you want to call it, as it allows the 10 EMA to catch up. So CASY looks pretty good too. Some other stocks that I like that are doing well is Sprouts Farmers Market. You want to save a little money on your food, don't go to Whole Foods, go to Sprouts. This one had this nice consolidation here with that $40 buy point, and now it's starting to push away from its base. Sprouts looks pretty darn good. FedEx, yeah, FedEx looks good. in this consolidation period within the base. Popped off its 50 simple moving average today. So FedEx looks good. OII, this is one of those oil and gas field services stocks that I point to often, and this had a nice 6% rally today. As you can see, this consolidation period, the pullback, and now it's starting to push away from its base. That's Oceaneering, OII. SMCI, an oldie but goodie, had to say goodbye to that hero, but I still watch it. And it did this when I talked about the Nasdaq, this double bottom type of base type action here. It made a low below the 235. I think it went to like 228, and now I wouldn't be surprised to see it rally back up again. So definitely keep my eye on that one. VRT is another one of our leading stocks at MC stock charts, doing nothing wrong, just pulling back here to its 21, and any stock above its 21 is strong in this August September tape, which has been pretty horrific. APO, they recently purchased a company, natural gas company, and really sparked a rally in this stock. You can see the consolidation, this big consolidation, and then another base on base pattern, and finally ripped tire. Very strong stock, and you can see the sales and earnings growth with that one. So APO looks good. ACGL, this is insurance, man. When you got to go to insurance, you know it's a tough day. Insurance companies are doing well though, because of the higher rates. And this one just kind of flat on the session, but you can see the consolidation here. And it looks, I got to look at the weekly here. It looks like, yeah, base on base pattern here. And the consolidation period's only 9 weeks, so might take a little bit of time for that one. Another one in the energy coal space, which is strong as CEIX. You can see the consolidation and the move higher. The other one is AMR, which is one that I like, not ARM, not ARM, but AMR. This one had this nice move out of this consolidation. I'd mentioned it about 190, and people were saying, oh, it's a short, and now it's went up to like 250 and pulled back to its 10 EMA the last couple sessions on lighter volume, you can see here, and then bounced today nearly 4%. So that one looks good. Anyway, it's the last week in September, it's been a seasonally weak month, and it's holding true again this month. The Nasdaq was down like nearly 6%, as I said, and then got a bump today. So we're looking for a rally, and that's all I have for today, except for in honor of the great Steve Jobs, I have to say one more thing, and that is Williams-Sonoma, where I actually recently purchased I purchased a pot for my wife. I mean, when you're married so long, that's what you get, right? Pots and pans for your birthday. No, seriously, I'm taking her out for a experiences are what's best. So at our age, anyway, this formed this little wedge pattern, actually broke out today with the news of an investor putting some money down into Williams-Sonoma, nice 12% pop with 400% above average daily volume, and that type of action is not to be ignored. It's a well-run company. I was really surprised how expensive things are in there. Things are just expensive all the way around. But if you look at the weekly chart on Williams-Sonoma, you can see this long period of consolidation here. And now maybe we'll want to start to pop out of this little consolidation. I want to see how far this goes back, yeah, to 2021 when the Nasdaq fell out of favor, November of 21. So it's been a long, long time, nearly 2 years here, and maybe Williams-Sonoma's turned a corner. They've got some investors putting money into the business, and definitely one to keep an eye on. Anyway, that's it for me today. We'll check back tomorrow, and remember, today was day one. Stay positive. I know it's easy to get negative when the stock's going down day after day, week after week, but you got to be patient. You got to stay vigilant and stay engaged, and you got to stay disciplined too. You don't want to be chasing every stock that's going up 12% like WSM. We just watch them. We cannot control the markets. We can only control the exposure we have to the markets, and so we want to manage that risk, manage that exposure wait until the market starts to cooperate, then we'll step on the gas. I have a sense that's coming pretty soon. Anyway, at MC Stock Charts, we never give up. Have a good evening. Thank you for watching.